Welcome to Investment IQ Insights. Here, we empower you to take control of your financial future. Discover invaluable personal finance tips and expert stock market investment strategies to make informed decisions and grow your wealth. Ever wonder how millionaires are made? Well, legendary UK investor Jim Slater, commonly referred to as the Warren Buffett of the UK, and famous UK investor Tom Stevenson, have the blueprint, and today we're breaking it down. In this video titled, How to Become a Millionaire, we're diving into Slater's and Stevenson's step-by-step strategies of how to become a millionaire based on their book of the same title. We believe the information provided here will help you build some serious wealth. Ready to learn from two of the best in the business? Let's get started. Step 1 is all about clarity. You hear that everywhere, right? Well, that's because it's true, and it's especially true when it comes to your money. Slater and Stevenson emphasize the importance of setting clear financial goals. Think of it like a road trip. You'd map out your destination. It's the same with your money. Define your goal, write it down. There's power in putting pen to paper. Create a plan. What steps do you need to take? How much do you need to save? Set a specific time frame. This gives you a target to shoot for. Remember, a goal without a plan is just a wish. Now, let's talk about saving. Becoming a millionaire isn't just about making money. It's also about saving it. You can't invest what you don't have. Jim Slater advocates aggressive saving. Prioritize saving in your life. The more you save, the faster you build wealth. Live below your means. Spend less than you earn. Be conscious of your spending habits. Cut out unnecessary expenses, daily coffee, unused subscriptions, impulse purchases, wealth killers. High-interest debt can set you back. Credit card debt, payday loans are enemies of wealth building. This simple habit starts your millionaire journey. All right, you're saving aggressively. You're avoiding debt. Now it's time to put those savings to work. Because sitting in a savings account isn't going to get you to millionaire status anytime soon. The book stresses the importance of investing in growth assets, things that have the potential to increase in value over time. Now, this could be a lot of things. Slater himself was a huge proponent of stocks, especially companies with high growth potential. He loved finding those hidden gems that were undervalued by the market. But it doesn't have to be stocks. It could be real estate. It could be starting your own business. It could be investing in yourself through education or training that will increase your earning potential. The key is to get your money working for you, so your wealth can multiply over time. Remember, you're not just trying to save your way to $1 million, you're trying to invest your way there. Chapter 4. Leverage compound interest. Now this is where things get really exciting. We're going to talk about the magic of compound interest. Einstein called it the eighth wonder of the world, and Jim Slater couldn't agree more. So what is it? Simply put, it's the concept of earning interest on your interest. It's like a snowball effect for your money. By investing early and reinvesting your returns, you allow your wealth to grow exponentially. The longer your money's invested, the more time it has to compound. Let me give you an example. Let's say you invest $10,000 at a 7% annual return. After the first year, you'd have $10,700. But here's the thing, in year 2, you're not just earning interest on that original $10,000. You're also earning interest on that $700 in interest you made the year before. And so on and so on. That's why it's crucial to start as soon as possible. The earlier you start, the more time your money has to compound, and the more dramatic the results. Chapter 5. Take calculated risks. Now, let's get real for a second. Building wealth isn't always going to be a smooth ride. It's not just about saving and investing your money in safe, predictable ways. To really accelerate your path to wealth, you're going to have to take some risks. But, and this is a big but, as Slater and Stevenson highlight, these need to be calculated risks. We're not talking about gambling here. We're talking about doing your research, understanding the potential downsides, and being comfortable with the level of risk you're taking on. Avoid being overly cautious. While no investment is guaranteed, doing your research and taking measured risks will help you move faster towards your goal. Think of it like this. If you're too afraid of losing money, you'll never put yourself in a position to make significant gains. Just remember, risk is necessary for reward, but be smart about it. Don't let fear paralyze you, but don't be reckless either. Balance is key. Chapter 6. Diversify your investments. So, We just talked about taking calculated risks, but how do you mitigate those risks? That's where diversification comes in. Diversification is simply the practice of spreading your investments across different asset classes and industries. Think of it like this. You wouldn't put all your eggs in one basket, would you? The same principle applies to investing. Why is diversification so important? Because it protects your wealth while still allowing it to grow. No one can predict the future, and markets can be unpredictable. By diversifying, you're essentially hedging your bets. If one asset class takes a hit, you've got other investments to cushion the blow. It reduces your chances of losing everything in one go. Diversification helps you weather the storms in the markets. It's like having a financial safety net. Chapter 7. Learn and adapt. All right, so you've set your goals, you're saving, you're investing, you're diversifying, and you're taking calculated risks. Are we done? Not even close. See, the world of finance is constantly changing. New information is always coming out, markets are constantly fluctuating, and what worked yesterday might not work tomorrow. That's why Slater and Stevenson stress the importance of continuous learning. You've got to stay ahead of the curve. Keep educating yourself on investing, financial trends, and personal finance. Read books, listen to podcasts, take courses, talk to financial advisors. There are so many resources available to you, and the more you learn, the better equipped you'll be to navigate the complexities of the financial world. Be willing to adapt your strategy as markets and circumstances change. Don't be afraid to pivot if something isn't working. The more you learn, the better you'll be at spotting opportunities and avoiding pitfalls. Remember, knowledge is power, and in the world of finance, it can be the difference between building wealth and staying stagnant. Chapter 8. Monitor and rebalance your portfolio. Now let's talk about what to do once you've got your investments set up. Because it's not enough to just set it and forget it. You've got to be proactive about managing your money. That's why Slater and Stevenson emphasize the importance of regularly reviewing your portfolio. This means taking a look at your investments on a regular basis to make sure they're still aligned with your goals. How often should you do this? Well, it depends on your investment style and risk tolerance. But at the very minimum, you should be reviewing your portfolio at least once a year. Rebalancing is essential to maintain your desired mix of investments. As markets fluctuate, some investments will grow faster than others. This can throw your portfolio out of balance and expose you to more risk than you're comfortable with. If one asset class becomes too large or too small compared to your target allocation, adjust it. This might mean selling some of your winners and reinvesting those profits into other areas of your portfolio. This helps you stay on track toward your millionaire goal. It's like giving your financial plan a regular tune-up. Chapter 9. Stay disciplined and patient. Now let's talk about one of the most challenging aspects of becoming a millionaire, the mental game. Because it's not just about knowing what to do with your money, it's about having the discipline and patience to stick to your plan, even when things get tough. One of the hardest parts of becoming a millionaire is having the discipline to stay the course. It's easy to get caught up in the excitement of a bull market, or to panic when things start to go south. But Slater and Stevenson remind us to stay patient and focused on the long term. Remember, wealth building takes time. It's a marathon, not a sprint. You're going to face market ups and downs. You're going to make mistakes. And you're going to be tempted to deviate from your plan. But it's during those times that it's most important to stay disciplined. Avoid making emotional decisions based on fear or greed. Stick to your strategy, trust the process, and remember that slow and steady wins the race. The more you can remove emotion from your investment decisions, the better off you'll be. Chapter 10. Maintain health and motivation. And last but not least, let's talk about something that's often overlooked when it comes to building wealth: your health and motivation. Because what's the point of having all the money in the world if you're not healthy enough to enjoy it? Or if you're so burnt out from the grind that you no longer have the energy to pursue your passions? Slater and Stevenson encourage us to maintain our health and motivation throughout the process. Make sure you're taking care of yourself physically, mentally, and emotionally. Take breaks when you need them. Prioritize your well-being, and don't be afraid to seek support from friends, family, or a therapist. Building wealth is important, but it shouldn't come at the expense of your health and happiness. Remember, a millionaire lifestyle is no good if you don't have the energy and health to enjoy it. That's your step-by-step guide to becoming a millionaire, courtesy of Jim Slater and Tom Stevenson. Remember, building wealth is a journey, not a destination. It's about making smart choices with your money, investing in your future, and having the discipline and patience to stay the course. If you liked this video and found it helpful, we bet that you will like the other 2 videos now appearing on the screen. Go ahead and click on one of them now to gain more tips on investing and building wealth. Thanks for watching, and we'll see you in the next video.